So today I'd like to continue our conversation of the emotional aspects of selling your company, kind of like that journey through the sell process and how to navigate these emotions that you undoubtedly will feel as you make this critical decision, in your life. I mean, this is outside of maybe getting married, having children. When it's time to sell your business, it is the most important decision that you're going to come to, and the timing of it, and when you do that, and how you feel about it, is going to kind of dictate the next chapter of your life. And you want to go into it with a sense of, confidence, right? And I wrote down a bunch of adjectives on the positive side of a business owner, right? You started your business years ago. You had a plan. You were confident. You were empowered. You were passionate. You had this feeling of energy and, engagement that I'm ready to go. I'm willing to make this risk. I mean, I started Osage, when was it? 2001, 6 weeks before 9/11, with an idea and a model, 2 kids at home, young, still in grammar school, and not a client. And here we are today, 23 years later. And, and I stayed with it. I put everything I had into it with the support of my family. And we had our ups and downs. We've had some very good years, and, we had some tough years. Great recession. Everything froze up. I had 3 deals in market. They all just went away at that time because you couldn't finance a transaction. Stayed with it, pivoted, made some changes, kept it going, continued to flourish. And then a pandemic hit. I'm like, who would have thought a pandemic would be something that would stop your business dead in its tracks? And I thought about it, and, it was like, okay, we have a pause. The world's not ending. And as a kind of a contrarian, I said to myself, what am I going to do until M&A picks up? And one of the things that came to mind was starting a podcast, because a lot of everybody was caught, blindsided by the pandemic. No one prepared for it. You can't prepare for something like this. And how am I going to help, business owners navigate these choppy waters, so to speak, when they're ready to make that decision? And, we are not expecting to have a lot of conversations. Was it April, March 20th, official beginning in the U.S., and April, and then we got into May, and that's, when I decided, like, what, I'm going to this podcast, and I'm going to get on, it's this the first year we were all audio. We didn't start the YouTube channel the second year, but start providing business owners with tools and how to kind of navigate that emotional landscape of the process. Because the opposite of all these things and confidence that we had, when you're ready to sell, it's something that I would say 95% of our clients have never gone through. It raises that other aspect of the emotional roller coaster, doubt, uncertainty, insecurity, apprehension, hesitation, and I think most of all, fear of the unknown. What is really going to happen to me after I sell my company? And, how you break it down, and I would say step by step, kind of looking at your business. I mean, most of our clients, to somewhat it has been a lifestyle business. They've grown year over year, have done well, taken care of their employees, expanded their customer base, good relationship with their vendors, participated in the community. But, when you're selling how do I approach it? And I need to make this critical decision. So, today I'm just going to kind of go through a few things that I think can maybe help kind of diffuse or settle your emotions. And the first one I think is in everybody's mind. Question number one is, okay, what's my business worth? Which leads to, is it enough for me to live after I sell, right? It's a reasonable question. Every business wants to know. I mean, we all have these conversations with our peer group. So-and-so sold his company for X, and so-and-so did his company for Y, but they're not your company, right? It could be in a whole different industry. So what am I talking about? What am I looking at? What's my business worth? And you may have gotten, or most likely have gotten, some kind of business valuation for, whether it be estate tax planning, trusted planning, charitable giving planning, buy and sell, between you and your partner. But that's like an internal value, right? If it happened, just to liquidate the business or sell the business internally. It doesn't give a market perspective about how the buyer is going to look at my company. And like I said, I opened up Osage with this idea. Say, okay, the family closely held businesses are underserved. They really didn't have a go-to person when they're ready to sell. Back then, it was the big banks, like the large banks out of New York that ran these auction processes internationally, and then had people bid against each other to get a right to meet with you to see that the right buyer, and they kind of set the market, almost like the stock market. Every day, the price changes back and forth, but at that particular time, this is what it's worth. And then you have the business broker community, which does a great job, but they kind of are listing. They put a price on it. Most of them do, right? Back then they all did. But that kind of sets expectations that, okay, is someone going to pay more than that price? Probably not. The yes on that price? Probably yes, right? So when they formed Osage, we decided that, okay, owners who have planned or thinking of selling deserve the highest level of service. So we've taken that big bank approach to family closely held companies who we've been working with for the last 23 years plus. And so the market dictates value. So you can pick the best buyer that's the right fit at the right value. And it's not just the price, right? For you, it's the price, of course. It's the legacy of your firm, the culture you created, taking care of your employees, being part of the fabric of the community. All those play into your decision. That's right. That's the emotional component that you want to talk about. So one way to kind of alleviate that from our perspective is that we spend invest a lot of time up front with potential clients, and we do what we say is, okay, let's a market value of your business in the current market, right? So we invest our time. We don't charge for it. And I made that decision years ago because this is an opportunity for us to get to know you and you to get to know us and see if we're a good fit. So we'll look at trends. We'll look at your industry. We'll look at your growth year over year. Look at your profitability. Look at your customer concentration, if any, your margin profile, and X. And we have a lot of data points. Obviously, transactions we've done over the years, the current timing of the market, and we also subscribe to various services that give us data points as to what a typical trading value would be. Some of these are public companies. Most of them are private companies. And we sit with you and we say, look, based on this, we believe your company will likely trade between X and Y. And how you react to that is a key hurdle for you from an emotional perspective. It's like, yeah, that makes sense, right? I believe my company's worth between 10 and 12 million or 20, 25 million or 50 to 60 million, right? We don't provide any value guidance to buyers. We want them to bid and present them with offers. And again, value is different for different buyers. Some will value in that range, some will value below that range, and hopefully a few will value above that range. But we want to be of like minds. So when we go to market at that time, this is where we think is going to trade. So that kind of takes out a piece of the doubt, right? I mean, you kind of say, okay, my company's worth 10 to 12 million. That works for me. But maybe it doesn't. Maybe you say, look, I need more. I'm not sure I can live on that, the net, proceeds. And so, we always ask our clients, well, have you sat with your wealth management advisory team and kind of say what really does work for you, right? And you may think the number is more like 15 or 20. In fact, there was a situation years ago where they thought they needed 20 million and their advice said you need like 8, in a very conservative method. So, and then a good wealth manager will not just look at your needs, but they will take, things that benefit you afforded yourself throughout your company, those quote unquote discretionary expenses. They now become a personal expense, right? A good wealth manager is going to not only look at what you've taken out of your business, they're also going to look at a number of items that run through your company, right? There's some of these things you've afforded yourself, like quote unquote in the trade, discretionary expenses. And they're going to factor in because those are going to become personal to you after the sale, right? They're not going to run for the business anymore. So they get a good landscape and they will kind of provide additional support, justification, comfort to you that, yeah, this number works for me. We had a client, actually it wasn't a client of ours, it was one of our peers. And they had a client that said they needed $20 million. And they felt the company was worth between 10 and 12. So they introduced a good, strong wealth management firm, and they did a deep dive into the personal aspects, current holdings, business, et cetera, and said, if you sell at this 10 to 12 million based on your life needs and enjoyment, this is going to last you over 50 years, right? And his person was in his 60s. So, likelihood of running out of money, so to speak, which is a concern to a lot of people, was very minimal, if at all. So, they eventually, the ownership of the business kind of came down and realized that. So, but, we have that, what I'd call open, honest, frank conversation with potential clients up front. Because we want to be on the same page, like minds. We at OSAG, we're going to commit hundreds of hours, a team of 4 people, into getting a deal done that works for you. And we're not going to start off on the wrong foot and say, look, okay, yeah, we may be able to get you to this number when we know it's likely going to trade between X and Y. It's not fair to you. It's not fair to us. So, and that builds a trust that we're trying to be open, transparent about where we feel it's going to be. We all love surprises. It's kind of like that white knight that comes in once in a while and says, I really want this company. It fits every box, checks everything I need, and I'm willing to pay a premium. It happens. And then frankly, we run a competitive process with our clients, and we're able to, bid up these buyers and maybe get above that high range of what we initially talked about. But that is the first thing I think me as a business owner really needs to focus on, is to really understand the market value of your company. It's going to eliminate that doubt, uncertainty, apprehension, hesitation. I mean, you don't want to find yourself in a position where I need more money, it doesn't work for me. Our answer typically is, and we turn down a lot of business, frankly, because we just don't feel that we can achieve that kind of value, and we don't want to disappoint. And so we say, look, if you want to get to that value, you need to increase your profitability by X, Y, and Z, and then let's revisit in a couple of years. Some buyers, depending on your age, don't have that kind of time. They don't want to make that investment in capital equipment or people right down the line that's going to take to get to there. And so maybe you talk to somebody else, or they come back and say, okay, it's not exactly what I wanted, but I understand the market and I want to work with you, right? So from an emotional perspective, you kind of settled in your mind, that's kind of where it's going to be. Now, look, things could affect that value, i.e. the pandemic, right? Supply chain issues, you lost a big account, interest rate hikes, visibility in the marketplace, geopolitical things that will come into play that changes the market landscape. I mean, in a 3% interest environment, companies were trading at, say, 6 to 7. In a 7% interest environment, companies will likely trade, between 5 and 6. How come the decrease? Because cost of capital is more. And most buyers are going to leverage the capital, and to cover the debt service, they can only pay Y. So timing is everything that plays into it. So if you have affordability of waiting, maybe that's the thing to do. If you don't, then this is where the market's going to be, and you're kind of comfortable or get comfortable with that decision. And then you start looking at, you kind of get over that piece of it. Okay, I'm ready to go. I'm ready to go to market. And so then you start looking at, okay, am I really prepared to go to market? And you take a deep dive and you start looking at, okay, the first thing is, your financials. And we talked about, the due diligence, quality of earnings, basically someone doing a CAT scan, MRI in your business. And so you sit there and you say, okay, well, you could have a CFO, kind of strong financial department analyst. They provide up-to-date, 2 weeks after your month end, good, solid monthly financials with a dashboard about sales and margins and everything else. And so you're well informed, right? And you're comfortable. And you have a outside accounting firm of brand name, read the regional or national, that does an audit or review on your financials. And so you're comfortable that my numbers are going to hold up. Or you can be, like a lot of small business, you have a controller or a bookkeeper that does your numbers. You look at them monthly, make sure, mainly your cash balances. You look at them, make sure things are reasonable, but you don't really take a deep dive like a buyer would do. And you say to yourself, I haven't really looked at this. How's that going to all hold up, through a transaction? So it raises, your anxiety levels, kind of, what should I do about it? Well, we'll see what happens. Well, that's not kind of the answer, right? The answer is, in our opinion, is that you can mitigate some of this fear or anxiety by you bring in an outside firm, whether it's your current accounting firm or you bring in somebody, a transactional firm, and you have them do a sell-side quality of earnings. So you want them to kind of look at your financials and poke holes in them so that you could take corrective action before you go to market. I mean, there's nothing more important, no surprises, reducing that level of skepticism when you go to market. That is more critical. You don't want to be caught off guard. So sell-side QV, it's an investment. An investment in you're selling your business, right? It's going to help you mitigate certain risks. It's going to help you take certain doubts, uncertainty out of it. And so when you go to market, like the buyer's going to do their deal. No matter what you do, the buyer's still going to do their quality of earnings, but at least you feel you've invested the money to eliminate these traps, these uncertainties, or risks associated with your numbers. And we can go down a list, right? You can go down to, my team. When do I tell my team? I really want to tell how they're going to react to it. Ways to kind of mitigate that is maybe you have stay bonuses. People are going to stay on post-closing, so they're comfortable, right? That they have a financial incentive. If you're somewhat bigger corporations, maybe you have established, deferred comp plans that kick in after a certain amount of time. So they have a vested interest in the success of the transaction. These are the type of things that, and we can go down the list on and on and on, but for you as a business owner, for me as a business owner, taking that uncertainty out of the transaction, getting you comfortable about these unknowns. I mean, likely, look, the buyers, 75% of buyers of your business are people you never thought of or never heard of? Because you think you know the best buyers, right? People you see at trade shows, so-and-so is going to come in, they're going to do the deal, I'll be fine, I'm great. I mean, I'm sure we all have gotten phone calls, I know a lot of our clients have, from their peer group and industry players who have sold their companies, and they get a phone call from Joe or Jane, hey, I just sold my company to X, I'd love to talk to you. That's their job. Once they sell the company, it's like, who else do you know? We want to buy their company too. But who are these people? You don't know who these people are, right? And so proper preparation right down the line, right? Financials, operations, sales and marketing, personnel, social media, everything play a critical role in the success and kind of tamp down, mitigate a number of uncertainties and doubts in your mind to help you get to the finish line on your terms. It's easier said than done. The emotional landscape of transaction is it's a moving target because things happen. And I'm hoping today that we've gone through some scenarios and some ideas that can help you throughout that journey to navigate those waters to a successful outcome. I want to thank you again for being here today. My name is Keith Dee. I'm founder, president of Osage Advisors. Osage Advisors is a investment bank working with family close-held businesses looking to sell. To learn more about us, you can visit our website at osageadvisors.com. Shoot me an email at kdee@osageadvisors.com. Pick up the phone and give me a call at 860-767-3273, extension 1001. I want to thank you again for being with us today at the Ins and Outs of Selling a Business podcast. If you like it, please feel free to subscribe to our YouTube channel. And thanks again for being here today, and have a great day.